That is not the goal with which I operate. I am operating simply with the viewpoint of creating more and more freedom for me. Hi everyone, welcome to today's video. So on today's video, I am going to have a very honest discussion with you about building wealth. I'm going to talk about 5 specific practical strategies to build wealth. These are same principles that I have adopted in my life. So hopefully you will find these to be insightful. So let us get the discussion started. But before doing that, there is a very important question that I have to ask you. And please comment and let me know in the comment box what do you think about it and which of these 2 following choices will you pick. Choice 1, you are 25 years old. You are making 1 lakh rupees a month. But the problem is that you are only getting 1 hour of free time every day. Your option 2 is that you're 25 years old, you are making 50,000 rupees a month and you are getting 4 hours of free time every day. So which of these 2 options will you pick and why? I will also detail my answer somewhere along the video, so please stay tuned till the end. So let us get the discussion started, and the first key strategy that you must know about building wealth is that please don't do goal-based investing. Now, many of you might be new to the stock market or to the finance world. So to them, very quick input on what goal-based investing is. So many a times people save money in order to take certain expenditure. For example, they will save 5,000 rupees every month for 4 months to take a Shimla trip. Or they might save 5,000 rupees every month for almost 1 year to buy an iPhone. So this is called as goal-based investing. Now, almost the entire subset of investors are encouraged to do goal-based investing. If you go speak with a mutual fund manager, they will tell you that, hey, do goal-based investing. If a mutual fund advisor comes to you, they will say, do goal-based investing. If you go to a random website and if they help you generate an investment plan, they will ask you what your goals are. Now, my viewpoint on this entire goal-based investing scenario is that you should not do goal-based investing to begin with. Why is that? Let me explain you one by one. So first and foremost, whenever you are doing goal-based investing, majority of us end up picking wrong goals to begin with. There are essentially 3 types of assets in which goal-based investing is done. First is an appreciating asset. For example, I'm using an iPhone to shoot this video. This is a type of an appreciating asset for me because I'm making productive use out of it. Similarly, you might do an MBA. So that might be an appreciating asset for you because every year your MBA might allow you to earn more or more money. Or probably if you do it from a really random bad college, then an MBA becomes a liability. But I hope you get the understanding of what appreciating assets are. Problem is that we do goal-based investing in depreciating assets. We would have no productive use of iPhone, but we will save money every month to go buy an iPhone. Similarly, we might not have any productive use of the car. By I say productive use, I mean that you use that car to make money. Otherwise, a lot of people in the comment section will start arguing with me that Akshat, productive use of my car is that I go on a drive to eat ice cream or I go on a drive to my office. Okay, fine, that is productive use also. But in my definition of being productive means that it allows you to make money sustainably. Now, the third type of asset where goal-based investing is done are critical assets. So critical asset means that, for example, if you want to get married. Now, is it an appreciating asset? No. Is it a depreciating asset? I cannot say. If I say yes to it, then my wife will get really mad at me. And also, please don't tell to your husband or wife that Akshat taught us that marriage is a depreciating asset. Your gharwale might kick you out. So the bottom line is that first and foremost, when we start doing goal-based investing, we get the definition of the goal incorrect to begin with. We end up doing goal-based investing for depreciating assets, which we should completely avoid. This is the first critical point about goal-based investing. Second critical point about goal-based investing is that goal-based investing is really complex to do. Why is that? So imagine it in this way that when you are 22, 23, you start working, you get your first paycheck and you set out a goal that after 10 years, I want to buy my own house. So that is the goal with which you have started your investment journey. You are 22, 23. Now what will happen is that in the early part of your life, you should be taking riskier bets. You might have often heard that when you are young, you should allocate more of your funds to equity over debt. But when you grow old, for example, in case of your parents, they are usually advised what? They are advised the complete opposite, that you should be taking more positions in debt or bonds, fixed deposits, over equities. Why is that? Because with age, you should start transferring your risky money into safer havens like fixed deposit, bonds, etc. So when you are 22, 23, you start saving money in order to buy a house after 10 years. But along the way, your age has also increased. So you should have rebalanced your portfolio and allocated more of your money towards debt. But majority of us fail to make these type of asset allocations and move from riskier to slightly risk-free assets. So this is a critical mistake that that we make as retail investors, and we need to be cognizant about it. So here you have a couple of options. One is that with every passing year, you should allocate a little bit more money to your REIT. So this is point one. Point two, or option two, is that you can check a list of small cases. I'm putting it in the description box. Those kind of small cases you could consider investing in. And as your goal-based time horizon comes near, these small cases will give you timely reminders to rebalance your portfolio. Now, many of you might ask me that, Akshat, how do you personally do it and why? Now, very, very genuinely speaking, I don't do goal-based investing. Now, why is that? Allow me to explain. So first and foremost, over the years, I have built a big corpus. Whatever emergency fund I had to allocate, I have already allocated it. Whatever money I make now, I am a slightly risky investor. I invest in growth assets. I do not have a defensive portfolio at all. Is that sensible? It really depends on the type of a person you are, what work you are doing, what your income streams are, etc., etc. But in my case, my primary goal is freedom in life. I have been a staunch advocate about having freedom in your life, and for that, I need to be an aggressive growth investor. Therefore, I invest aggressively in different set of assets. Is that strategy for everyone? The answer is no. But if you want more clarity on my strategy, here it goes. Whatever money I make, I try to invest maximum amount of it. Now, why is that the case? Because I feel that I can convert the money that I have into more free time. And the more free time I have, the more freedom I will have. So that is the perspective with which I'm approaching the entire investment journey for myself. I'm not saving and investing to go take a trip to Europe or go take a trip to Bali, all that stuff. No, that is not the goal with which I operate. I'm operating simply with the viewpoint of creating more and more freedom for me. So this brings me to my second strategy, that you need to understand the assets that you have and you need to truly optimize those assets. So according to my understanding, there are three types of assets that you have. One is that you have time. This is a critical asset and a finite asset that all of us own. Second is the money, because if you have money, you can pour in that money, put in that money, make more money out of it. And third is your skills, because if you have skill, then you can improve your per hourly rate or your earning potential or create more income streams. So there is a strong confluence between these three different assets. Let me explain by using a couple of examples. So imagine if you're a college student, what will you have? A lot. You will have a lot of free time if you're in college or school. Please don't tell me that, in college, I'm like super busy organizing like tech fest, this, that. No, colleges are completely villa. At least majority of the colleges, students are completely villa in college. So please don't tell me that, hey, you know what? I'm like time poor while I'm in college. No one is. Everyone has crazy amount of time in college. If you are time poor in college, then it probably means that you're wasting time. Let me know. This is a very, very honest conversation. But yes, you are time rich, but in college or school, you are money poor. So you don't have a lot of money in school. But if you are skilled, for example, if you pick up certain skills like video editing, or if you learn how to do graphic designing, then you can use your free time to make money. So what you have essentially done is that you have utilized your free time, use your skill to make money, an asset where you were poor. Now juxtapose this with when you are working in a corporate world. So the word of the day today is juxtapose. Let me know what does that mean. So when you are in the corporate world, what happens is that probably you are money rich. I'm using the word probably. So probably you are money rich, but most likely you are time poor. So what can you do? You can again upskill. You can become very efficient in the work that you are doing. And if you are efficient, that would allow you to create more free time. So that way you will become time rich also and money rich also. So if you understand all these three different ecosystem, which is the time ecosystem, money ecosystem, and skill ecosystem, and become really good at it, then it leads to something called as having more freedom, because you need to step back and ask yourself that, hey, why am I going to office like from morning to evening? Why am I upskilling? Why am I watching Akshat's video? The end goal has to be freedom. The end goal cannot be that, hey, you know what, I just need like more money or I just need more free time. It has to be a combination of all these three different skill sets that I talked about, because if you have all these three key things sitting, more time, more money, more skills, that is when it leads to more confidence and freedom. Now comes the third commonsensical point which you must follow in order to preserve your wealth or grow your wealth. This third point is that please do not invest in get rich quick schemes. And to prove this, I will give you two examples, one from stock market and one from crypto market. Yes, so we are going to talk about cryptos also. So from the stock market, there was a share called as Brightcom Group. I had talked about this share, made a video a few months ago warning people that, hey, this looks like a manipulated stock. Why did I say it? Here's an entire video. You can go watch the link and understand it more. But essentially, according to me, the company was not clear with accounting. There was no reason for such a massive price rise in the stock. But nevertheless, people jumped on board. They jacked up the prices. In fact, SEBI very recently ordered a forensic audit of that company. And after that, interestingly, the share prices rose again and now they are falling. So the point is that why do people get into these type of stocks? The reason is that people want to make very quick money. Please do not invest in any asset class, any particular stock to get rich quick. The most sensible way of getting rich is understand business analysis, understand stock and crypto analysis, and only the assets in which you have confidence, which you can understand. Please take positions in them only. Which brings us to the second example that Akshat, crypto seems like a get rich quick scheme. Why do you keep talking about cryptos? Crypto is like Voldemort currency. Crypto is bad, this, that. Okay, so let us quickly discuss cryptos also. I myself have advocated the viewpoint that 99% of cryptos are bad cryptos. In fact, 80-85% of stocks are also bad. Our job as investor is just to invest in good asset classes, stay diversified, and within those asset classes, we need to pick the best assets possible. So that is the goal with which we should go and take positions in every asset class that you are bullish about. So bottom line here is that please don't invest in get rich quick schemes. Your job should be to identify good asset classes, whichever asset classes you feel are good. I don't need to tell you that. Whichever you are comfortable with, please take positions in those asset classes, and within those asset classes, identify good assets. Please don't try to identify the next big multi-baggers and all that stuff. It might not help. Now, the fourth strategy or the fourth key piece of advice that I will have for you in order to become wealthy is think long term, think sustainable. Let me help you understand that point from a more physiological perspective. So do you know the difference between insects and humans? There are many differences, but one key difference is that humans can do something called as nexting. So nexting simply means that we have that second layer of thinking that is available to us. We can think, imagine the future. We can do prognosis of things. So that is what nexting means. And no other insect or no other mammal is able to do that. So therefore, it is very important for us to use this human power to think long term. Now you might say, Akshat, this looks like very pravachani. You are giving pravachans now. And can you give an example of when people do not think long term? I can give you 100 examples, but let me give you an example with which all of us can relate. It is about MBA education. For example, if you go on LinkedIn or if you go on Twitter, people will keep talking about that, you know what, college education is useless, MBA is like so expensive, or I did my MBA from this particular business school and my fees was 25,000 and I got a package of 25 lakhs. So look at how great the ROI of my MBA was. Yes, and this is the exact same discussion that you will keep on hearing from people, and this analysis is completely wrong. Why? Because whenever you are investing in any skill, it's not as if that it will give you immediate returns. It takes time for that skill to compound, you becoming better at it, you gathering more experiences, and then it starts giving you returns. For example, I left my management consulting job in 2018 and I started my YouTube channel in 2021. Now the skills that I use in terms of running this YouTube channel, they are all management consulting driven. Be it business analysis, be it structured thinking, be it bucket oriented framework speaking. These are skills that have compounded over time and have given me more returns now compared to the returns that I was making in 2018. So whenever you are investing in any skill, please think about it from a long-term perspective. Think about a skill that you are going to use in the long term. If you are making a study abroad decision, or if you are making a decision to drop out of college or not drop out of college, think about from a long-term perspective. Yes, your decision might be right in order to drop out of college or not pursuing an MBA or pursuing some other degree, but all these decisions are long-term driven. Another example is short-term thinking when it comes to running a startup. Many VCs that I have spoken with, and many of them reach out to me also that, Akshat, is there a way we can invest in your company, etc., etc.? I say no, because I want to have the flexibility, freedom to build my businesses. My goal is not to build a unicorn. If I want, I can raise crazy amount of funding for the ventures that I am building. I'm not saying this to boast. I'm genuinely telling you, I can raise crazy amount of funding for the ventures and beat around that, you know what, I have raised this amount of fund, that amount of fund. But that impacts my long-term sustainability. That is the viewpoint with which I am operating. I'm telling you these points because many a time students reach out, they are running their startups. Their only goal is to raise funding as fast as possible. Please do not fall into that trap. Please think long-term. That will allow you to build wealth. Now comes the fifth and final trick in order to get wealthy, which is called as generating visual cues. What does that mean? This is very interesting. So I will use an example here. So when it comes to saving, for example, if I earn, let's say 1 lakh rupee a month, And if that money is sitting into my bank account, I will feel very happy that, hey, money is sitting into my bank account. I'll feel super elated. I will feel rich. And probably then I will have less incentive to work. Why? Because imagine a scenario where that 1 lakh rupee keeps on hitting my bank account. It has been 24 months. Now I have aggregated like 24 lakhs. I feel very, very confident about my skills. Everything good is happening. So what would I do? I will get complacent. I will get lazy. So therefore, it's very important for me to generate a visual cue by not keeping that money in my bank account at all. So I would pick up that money and I would invest it month after month and create a separation between me and my money in the form of investments in the middle. For example, if I'm investing in commercial properties or if I'm invested in some stocks or mutual funds, it's not as if that I will keep on tracking that portfolio. So the goal of investing for me become to create a space between me and my money. So please don't joke and put a comment below that, hey Akshat, if you want to separate you from your money, how about you give us your money, right? So yeah, funny joke, but I'm not going to do that. But I hope you get the picture that if you create a distance between you and your money in the form of investments, then it gives you more incentive to work. Now the same visual cues also apply to spending. For example, there is a reason why I do not like spending money in plastic form. Very rarely I will use debit card and I don't even own a credit card. So very rarely I will spend plastic money or even do transactions via UPI. Why? Because try doing this exercise. So go to a random city whenever you get a chance to travel. If you are traveling to Goa for vacation, do this exercise. Take 10,000 rupee out from an ATM and try to spend that money. Vis-a-vis, try spending plastic money. You yourself will see the difference that you will feel a lot of pain spending this 10,000 rupee here vis-a-vis here via plastic money. Why does that happen? Because it creates a visual stimulus. So in essence, 5 rules that we studied today. Number 1, please don't go crazy about goal-based investing. You need to be super careful whenever you're doing goal-based investing. Second key point, you have time, money and skills as your 3 prime assets. Optimize it, utilize it really well. Third, don't invest in get rich quick scheme. Please always focus on growing your wealth sustainably and in the long term. Fourth, think long term. That is the competitive advantage that we have as humans. Fifth and finally, generate visual cues. It will help you get better with your investments and also your spending. So coming back to the initial question that I asked, that which option will I pick? Option A, where I'm earning 1 lakh rupees but only getting 1 hour of free time, vis-a-vis earning 50,000 but getting 4 hours of free time. What do you think? So my answer there will be obvious that I will go with option B. Why? Because I will value that 4 hour more. I will utilize it to create more skill set and utilize those skill sets to generate more money in the long term. I hope you enjoyed the video. Please press the like button and also share it with your friends, and I will see you the next time.